Bitcoin is consolidating, not trending, not breaking, consolidating. Price remains bounded by both diagonal and horizontal structure, and yesterday's advance, despite appearing constructive, did not alter that framework. The range narrowed, compression persisted. Today we define the precise boundaries of this consolidation and what would be required for resolution in either direction. Today's analysis defines the containment boundaries precisely, examines yesterday's buyer attempt in the context of the diagonal structure, and identifies the exact levels that would shift the structural picture in either direction. Until one of those levels is decisively broken, the range remains the story. Bitcoin opened Monday at $65,958 and reached a session high of $70,113, a range of $4,814. That high pierced above the upper diagonal trend line on the wick but failed to close above it, returning price back inside the structure. The Fibonacci resistance zone above at $71,635 to $71,746 was not tested. Until buyers can produce a sustained close above $71,500, upside pressure remains structurally unconfirmed. Below $62,500, the ascending support trend line and the February 6th low at $60,000 define the downside boundary. Welcome back. We are price action traders. Every day, our focus is just one chart, the Bitcoin chart. That singular focus is what makes us Bitcoin technical analysis specialists. Every day, we answer 5 key structural questions for you. Where are the key price zones? Are the timeframes aligned? What is volatility signaling? What are the macro markets telling us? And what must change to revise Bitcoin's structure? Today, the answer to all 5 points to the same conclusion. Bitcoin is in a defined consolidation. Nothing has changed on the yearly, monthly, or weekly structures. The yearly uptrend remains intact. No bar, no close, and no sequence of price action in 2026 has structurally invalidated the higher timeframe picture. The monthly and weekly timeframes have remained in a corrective phase since early February 2026, and that state is unchanged. We note this not because it is new information, but because it is the foundation on which everything else in today's analysis rests. The higher timeframe defines the context. The lower timeframes define the current behavior within that context. Bitcoin is currently contained within 2 structures simultaneously, a diagonal structure and a horizontal structure. Understanding both is essential to reading today's price action correctly. For a full explanation of the diagonal structure and the equilibrium price derived from it, we refer you to our equilibrium video, linked in the description. Today, we examine how price is behaving within that framework and what yesterday's session revealed. The diagonal structure is defined by 2 converging trend lines. The descending resistance connects the 5th February high at $73,168 to the 25th February high at $70,028. These 2 lines are converging, the triangle that terminates in the 18th to 22nd March window we identified in the equilibrium video. Price is operating inside this narrowing corridor. The close at $68,947 was back inside the structure. Price touched above the diagonal resistance line on the wick and was rejected. The close is what matters in this analysis, and the close tells us buyers could not hold above the diagonal resistance. A wick is an attempt. A close is a statement. Yesterday gave us the former, not the latter. The horizontal structure is defined by the Fibonacci resistance zone, the FRZ, which sits above the diagonal resistance. Buyers need to break convincingly above both to be taken seriously. The FRZ sits at $71,635 to $71,746, with a further price level at $72,213. Yesterday's high of $70,113 did not come close to testing that zone. The FRZ remains uncontested. Until buyers can produce a sustained rally above $71,500, they are not demonstrating the structural conviction required to shift this analysis. Their failure to close above the diagonal resistance, let alone reach the FRZ, is entirely consistent with the containment framework. One thing to observe on the ascending support trend line, the lower boundary of the diagonal structure, is that it has now registered 3 confirmed touch points: the 6th February low at $60,000, the 24th February low at $62,527, and the 28th February low at $63,109. 3 touches on a rising diagonal, each accompanied by healthy reversal wicks, the market bouncing back from the line with force. A trend line with 3 confirmed touches carries more structural weight than one with 2. Buyers are defending around the $62,500 region, and the ascending support is holding. The honest read of this structure is therefore balanced. Sellers cannot push price below ascending support. Buyers cannot push price above diagonal resistance. Both sides are present. Neither side is winning. That is the definition of consolidation. The battleground is centered around the equilibrium point of $66,500, the midpoint of the diagonal structure, identified in our equilibrium video. Price continues to oscillate around this level, which is precisely what equilibrium behavior looks like. Neither side has the weight to move decisively away from it. If price is going to remain inside this pennant structure, the geometry suggests chop for the next 14 or more days, with the triangle terminating in the 18th to 22nd March window. The spring equinox on 21st March sits within that window. We are not forecasting a move on that date. We are noting the convergence of the geometric termination and the calendar. Structure will resolve on its own timeline. We will be here to listen. Bitcoin's volatility remains unsurprisingly unchanged in character. The daily ranges over the last 5 sessions tell the story: $2,232 on the 26th February, $3,326 on the 27th February, $4,592 on the 28th February, $3,042 on the 1st March, and $4,814 on the 2nd March. The ranges are oscillating rather than trending, expanding one session, contracting the next. There is no sustained directional expansion of volatility. Week 9 produced a range of $7,501. Week 10 has opened with its first bar producing a range of $4,814. One bar into the new week, insufficient to draw conclusions, but noted. Volatility will signal the breakout before price confirms it. We are watching for that signal. From a macro perspective, yesterday's session was non-committal on both key markets we monitor alongside Bitcoin. The US dollar index continued its push higher, supported by reports of China seeking to weaken the yuan against the dollar, a dynamic that adds a geopolitical dimension to the dollar's current strength. However, the DXY session was not a strong directional statement. It is pushing, but without the conviction of a confirmed regime shift. Gold did push higher during the session, but closed on its low, a bearish intraday signal after the previous session's gap up and kicker candle. Both markets appear to have absorbed and priced in the geopolitical tension from the Israel-US operation reported on Monday. Neither gold nor DXY produced the kind of sustained directional commitment that would create a decisive external catalyst for Bitcoin. The macro picture, like the Bitcoin chart itself, is in a holding pattern. The picture is straightforward. Bitcoin is consolidating inside a defined structure with both diagonal and horizontal boundaries. Yesterday's buyer attempt was the strongest session in recent days, but it produced a wick, not a close, above diagonal resistance. The ascending support trend line has 3 confirmed touches. The FRZ above remains uncontested. The equilibrium at $66,500 continues to act as the balance point. Macro markets are not providing an external catalyst in either direction. The levels that matter remain the same. A sustained close above $71,500 shifts the structural picture in favor of buyers. A sustained break below $62,500, followed by a violation of $60,000, shifts it in favor of sellers. Everything in between those levels is consolidation. We monitor. We do not anticipate. Discipline over prediction. We publish every day at 7 a.m. EST. If today's Bitcoin technical analysis added clarity to your view of the market, consider subscribing. You will not miss a daily update. Comment below. Are you watching the $71,500 breakout or the $60,000 floor? We read every comment. Structure is patient. It waits for the market to come to it. Tomorrow, the chart will have more to say, and we will be here to listen. Until then, look after yourself.